Whoa, 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 whoa. Prices are down? Is the market in free fall? Stay tuned to find out exactly what the heck is happening after these latest Market Watch numbers. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. So glad you joined me here. And here we go. The market dipped for the first time in a very long time, month over month. I'm going to give you my breakdown on the latest numbers and the slowdown that is in the stats. Well, kind of, a little bit of a slowdown. But before I give you what's my take on what's happening right now, let me be very, very clear about one thing first. I totally concur that there is slowdowns in certain pockets, but as a person who is very, very good at sales and numbers, I'll tell you this. I can make numbers say anything I want. So I can spin it both ways for you to give you an example. And in this example, I'm gonna spin it both ways because numbers can be perceived in many different ways to prove a point onto why you need to really think critically about what the heck is happening, right? However, here's kind of my overarching thesis. There is a slowdown. The buyer sentiment has waned and it's definitely softening while the supply side is fairly consistent from like a year basis and like from comparing this year to last year. So nothing crazy that's freaking out. But if this sustains with the kind of overarching interest rate hike that's coming in 2 weeks, and then when this video releases, the federal budget should be coming out, and there should be a little bit of negativity, right? So all of this stuff does impact the market and the buyer sentiment. And I can see that the slowdown may continue that we saw last month into this month. Meaning prices will continue downwards on average. So with that out of the way, let's get straight into the numbers. The average price is now $1.3 million, a little bit shy of that, right? It's down 2.6% from last month. Now, there are only 3 instances where prices dropped from February to March. More on that in a bit. But prices technically are up 18.5% from last year. Right? See what I mean? I can spin it whatever way you want, right? Sales are at about 11,000. They're up 20% from last month, which is normal, but they're down 30% from last year, which may sound like it's going to freak you out, but also more on that a little bit later. Then you got your months of inventory at 0.9, which is up 20% from last month. And there's a lot to unpack there at the 0.9. So let's start with the price that I was talking about first. Now over here, I'm going to put up a chart showing you all the numbers in March in the past 15 years or so, give or take, right? You can see that there are 3 instances where prices actually went down when you go from February to March. The first one is 2008, and we all know what happened then. Great financial crisis. The prices came down about like 0.5%. Then there's this next one, which was in 2020, and that's, when we got hit by the pandemic, prices came down about 1%, give or take. And remember, the pandemic came halfway through March, so it was actually quite hot then. And then in April of 2020, it went down 6% the following month in April, right? So that is a bigger jump. Then we have this year where prices are down 2.6%, making it the biggest drop from February to March. So is it time to be like, ding, 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 alarm bells, the world's falling, uh-oh, what's happening, right? If you read it that way, yeah, sure. But let me provide you an alternative perspective. Over here is the median price, the difference in the median price between February and March. In March, the median price was about 1.17 mil, or about $1,000 less than last month in February, which is pretty insignificant change. And in case you forgot, the median is the middle number, whereas the average is the sum of everything divided by the number of numbers or the amount. Meaning the middle purchase price, or like the most weight in the center, in February and March is about the same. So from a statistical viewpoint, there were less expensive properties that got sold, which you'll see makes sense shortly as the detached market took the biggest drop month to month, while the condos actually went up, right? It's weird. So, but if you look at the median numbers, the world isn't falling. Do you see what I mean? Depends on how you spin it. So here's another perspective for you. TRREB has this thing called the HPI, the home price index composite that takes the standard home, right? So in March 2020, this number was like 1.71 mil. And in Feb, it was like 1.69, which meant that March is actually higher in this month, or the standard home price actually went up from last month. So the world isn't falling and prices are now going up again. You see, That's just a spin. Now, I don't like using HPI, and like my gripe with this is that no one knows how the heck TRREB calculates this composite. So yeah, I don't want to use it. But let's not look at that. But my point is this. I can spin the numbers however you want, but personally, I'll just say it as it is. I've always been doing it very truthful and honest, kind of my perspective on the market, and I'll call a spade a spade. And the market is slowing down. Majority of the market is slowing down for sure. So now let's look at the sales component, like the number of transactions. Here's again the number of history, but I kind of rejiggied it and reordered it for you. And while 11,000 sales seems relatively low to last year in 2021, you can see that over here, 2022 is actually the third most sales that we have seen in like the last 15 years or so in March. So not really that concerning, right? Again, just how you frame it. But what is weird in the months of inventory is that it's still very low and the prices came down, which is like not the norm. But the thinking does coincide with the fact that the buyers are buying more of the inexpensive product, meaning the more affordable type of housing. So these are condos instead of like bigger homes. And on this chart over here, I've included new listings and also the absorption rate. So the absorption rate, in case you don't know, the SNLR is the sales to new listing ratio. And you can see that the number of listings we got in the month of March was like the second most only after last year. So definitely we saw the spring inventory surge because we definitely saw a huge inventory surge last year. And we only got like a little bit less than last year when the market was like ripping hot. But we are still 30% fewer sales than last year. So you can see that the absorption rate, or like the months of inventory and the metric of how we're measuring the market's activity, isn't that strong relative to last year. However, the absorption rate is on par with pre-pandemic, right? So before 2020 levels. So I'm not overly concerned. As people, we always try to find comfort in trying to predict what's going to happen through data or how it's like a repeat or like a mimic of history. So the question I've been kind of pondering and being asked a lot is the current numbers and the way this is looking, are we looking like circa 2017 spring, right, before home buyer tax, or like circa 2020 spring before, the pandemic? And in 2017, we saw the prices come down another like 8%, whereas in 2020, we saw prices rebound, even go higher in 2 months. Now you got to look at the macro backdrop. The difference between the two is that 2017 saw a reversal in prices because the government intervention, like I was talking about in last week's video, they came in with a foreign buyer tax, which I suspect we'll see today when this video launches. We also can throw in the interest rate in there at some point. Now, the other thing, alternatively, is 2020 saw a freeze due to the pandemic and the uncertainty, and then the interest rates went down and then prices went up, right? So if you ask me, I think we're closer to 2017, like a few years ago right now, than we are to 2020, like 2 years ago, or even 2021. Because when we saw an early seasonal slowdown last year before it ramped up again in the fall. So I don't think we're quite there per se. It could be, but I think we're closer to 2017 right now. And you have to remember the macro backdrop, again, like I was saying earlier, of what's happening. The interest rates are probably rising, so the overnight, which means prime rate will go up, which means variable will go up. Your HELOCs will probably go up, right, if anyone who's tapping it. Then you have the potential increased down payment coming from the federal budget to make it more difficult for investors to get into the market and buy more properties. So we continue to see these trends, seeing the absorption rate kind of decrease and then the months of inventory increase. We should continue seeing prices decrease. However, I don't think it's going to be like the end of the world. It's just seasonal changes in a different non-seasonal way right now. However, it's like I've been saying in the past like 2 videos. It's a game of chicken between the buyers and the sellers right now. If the sellers don't need to sell, they won't sell. However, there are definitely sellers who bought first and need to sell. So they are on the hook and will probably take less money than maybe what their neighbors got like a month ago. And that's kind of where the opportunity is. You got to like cherry pick comparables and see and gauge out whether someone is in need to close or not. And don't really let the macro backdrop dictate what's happening right now. Because like I can personally cherry pick some properties I've encountered last week and kind of show you both sides of the coin. Like we saw a 9 offer melee on Lee's side or 7 bully offer on an apartment in Mimico, right? That stuff's still there. The point here is that there will always be outliers in a shifting market. Just because a household of 10 offers doesn't mean the entire market is like that. And just because one seller took less money from last month doesn't mean that the market has come down that much in the delta from the neighbor's house, right? So you really can't take the micro and apply it to the macro. And you can just apply some of the macro and then look at the local to arrive at some data. And that's why you need a local realtor who understands what the heck is going on. But if I look at the entire market, like the average of everything, right? Like I was saying earlier, the overarching sentiment for me right now is that it is slowing down. If rates go up and the government changes occur, like I said that they would in this video, right? We should see like a slowdown, or like in the best case, like the market freezes at the price point and then it stays that way. So until I see an absorption rate, like say below 45% or months of inventory above 3, we're still very much in like a seller's market. So I'm not gonna freak out about that. It's just, a little bit of shift, but just a much slower seller's market as most people are expected to, right? In the last 2 months. So expect no offer dates potentially, but sellers don't need to sell, won't sell. And at the end of the day, I'm still very long-term bullish on real estate in Toronto. And when I say long-term bullish, that's like 3+ years. But short-term, I'm like almost bearish, just kind of looking at the data, but it's not quite there yet. But if I see opportunities to buy cash flowing properties myself in the GTA at a discount right now, I'm still going to do it. I'm still game. If I was looking for a house right now and I can find something that works for me, I'll still buy it or recommend buying it, right? As I said in the first 2 months of the pandemic, right? I'll buy opportunity if you're not going to sell in the near future and you need that property anyways. Now, this is the type of real estate content you enjoy. Be sure to help us spread the knowledge by smashing that like button and subscribing to the Prime Props channel, because every week, actually every month, we make big deep dive into these data to give you an idea of what the heck is going on in the market. Because again, there's a lot of things going on and everyone just reads the headlines about what's happening in stats, but we want to go deep dive and analytically break down all these things for you so that we can be honest and transparent. And by doing so, we hope that whenever you're ready to make a move in real estate, whether it's buy, sell, or invest, you'll be like, Zen, he knows what he's talking about. I'm going to work with him and his team. And you can do that by booking calls with me right here using this link. It's www.chatwithzen.com to strategize your future. Now, let's jump into the micro markets next, right? So we got the 4 and 6 detaches. I was saying this earlier, took the biggest beating, which I actually was quite surprised because it felt like everyone was doing the reverse pandemic and coming back into the city, right? Which is really weird because I am seeing that because many companies are mandating the employees go back and return to the office. And the average price is now back below 2 million. It's at like 1.9 or so, and it came down 7.42% in a month. But this makes sense because there were more purchases on the lower price point side, right? Like the condos on the lower spectrum. And as we saw with the median numbers, it was still kind of in the middle since the 4 and 6 detaches are the most expensive asset type in the greater Toronto area for all type of property types. So the months of inventory remain the same in this market. It's still at 1, which is still a very tight seller's market. And personally, I think the 4 and 6 detaches don't really go out of style, especially if you hit the trifecta of public schools, right? There's only so many houses in certain regions that hit it. And definitely just kind of feels like a little blip in my radar, just my 2 cents. The 4 and 6 semis prices are up about 3%. They're like 1.54 mil. And again, similar to 2017, when the market shifts, people shift their asset class purchases to something that's at a lower price point. So you can see the semis doing a little bit better than the detaches. And these are probably like your 3-bedroom, 1 or 2 washroom semis in like East York, Midtown, or like the West Side and Roncy, right? Then you got your towns, which surprisingly actually came down by like 1.25% to like 1.1 mil. Then of course you got your outlier to back up the median price staying the same, the condos. The 416 condo prices are up 1.13. Sales are up and the market is still super tight. Not quite as tight as once it was in February where we were sub 1 month of inventory, but eerily similar to 2017. This is why I've said many times that this is the year of the condos. This is probably the springboard to get it going. Now let's move on to the 905 over here. This is where I expected the biggest drop due to what I would say is the reverse pandemic, meaning everyone, again, is coming back, less demand in the burbs. But surprisingly, wasn't really that bad. Much like better than I thought. So the 905 detaches are down 5.51% from last month to about 1.63 mil. Still super expensive. Basically, January 2020 prices. Inventory has increased to 1, but I can certainly tell you there are certain pockets that feel like it's a lot more inventory than normal, and they're going to feel it more. Like anecdotally speaking, there are pockets that saw listings 10x, and I've seen some of that, and those will be the first areas I'll probably feel it first when like the price drops. But Strangely enough, there are like areas like Prime, Oakville, and Markham that are actually holding their value very well. And many of the homes still selling over asking with multiple offers, just not as high as once it was like a month ago. Then you have your 905 semis at like 1.2 mil, which is down like 6.34%. This didn't really surprise me because these went up the most rapidly because it was the most affordable part of the suburbs. And finally, you got your 905 towns, which are down like a little bit to 1.1 mil and down like 3.5%. Now, the interesting thing, like the condos in 4 and 6, is the 905 condos, just like the 4 and 6, is actually up a little bit. It's up about 760,000 right now, and it's up 0.5%. So you can see we're very much seeing a shift to affordability in both the 4 and 6 and the 905, making the average price come down a bit, but the median price is still staying the same. Right? You see that's kind of the trend I'm seeing right now. So it's not like the world is falling or anything. It's just there's a shift, there's a slowdown because of all the things coming. Now, 1 month doesn't mean it's a trend, but a trend does start with 1 month. So if we continue seeing this slowdown with the macro backdrop of a higher interest rate and the government interventions that should be coming, we should see the prices drop some more. This is why everyone's kind of watching the federal budget and the interest rate hike this month. And it's kind of like just taking a pause, just like, all right, let's see what's happening, just feel it out. And I think that will determine the buyer sentiment for us in the coming few weeks. And if we see harsh mandates from the federal budget, I suspect they'll be putting the foot on the brakes on the real estate market that was already kind of like self-correcting itself. And, that's very, what's the word I want to use? Typical of government because they're slow to the game. But only time will tell, right? And if you're concerned about what's happening right now and kind of just wondering, how do I apply the macro of all the things that are happening, look at the numbers and apply to the micro, which is your own personal situation, whether it be a move or a real estate investment or growing a portfolio, you can book a call with me using the link right here. It's www.childzen.com. And hopefully this kind of gives you an idea of what's kind of happening. I know a lot of people have been waiting for these numbers to see and kind of confirm what they're hearing anecdotally. And yeah, like I said, it is definitely slowing down, but it's not like, oh, hey, you know what? It slowed down a little bit. The world's not going to fall or it's going to blow up just because this month we didn't set another record price, right? Like remember, we've been setting record prices for like the last November, December, like 6 months, 5 months. So for us to not set a record price, cool. That's fine. It's actually normal. So no alarms that need to be sound. Hopefully that helps. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.